In focus tonight, the future of internet coupons. Groupon shares hitting record lows today after the company released its second quarter earnings. Its core business of offerings daily coupons taking a dramatic hit. So are people ditching the site for good? Joining me now, Wayne Kaufman, Chief Market Analyst for John Thomas, that is, Financial. Wayne, thanks for coming on tonight. Appreciate it. What's wrong with this company? What's going wrong here?
Well, Groupon is another in a list of overhyped internet IPOs that don't have proven sustainable business models. Investors are always looking for the next Google, and when they see an internet company that has tremendous initial growth, they think that they've found it.
Look, we're showing the stock chart right now. Yeah. It's down 27% today.
Yeah. Okay.
Here's what Groupon said about their earnings. They said a weak economy in Europe is hurting them, and currency exchange rates. Is that enough of an answer?
No, it's not, because their core business, which is their daily deals, that was down this quarter for the first time ever. But also their average revenues per user has been going down for 4 quarters. They've got tremendous competition. There's a lot of names in this arena, including Google, Amazon. So it's a tough thing.
Oh, let's say Facebook. I mean, you know, it feels like 2001 all over again to me. You know, you'd think people would learn something about these internet stocks. It seems to me that they have a shorter life cycle of many other categories. Do you agree?
Yes, people unfortunately have a linear mentality, and when they see this initial hyper growth, they think it's going to continue and that they're going to have the next Google, but they don't. They end up not living up to the hype. In the case of Groupon, this was only their 3rd public report, and after each report, the stock has sold off dramatically. And evidently, a lot of smart money knew about this, because the all-time high for the stock was its first day of trading, and ever since then, it's just headed south.
Well, it's down 72% since the IPO, so that tells you something. I want to show our viewers too. We have a full screen on quarterly revenues, and it tells the tale. It just slides like this.
That's exactly right.
What's your advice to individual investors who would like to play the internet game but are not sure how to go about it in terms of investing? What would you say?
I would say avoid IPOs unless you've really done your homework on the valuations of them. We've seen a lot of these now start out great, they're overhyped, and they come down. In the case of Groupon, this is now a very speculative stock. There's a heavy short position on the stock. And in spite of that, it didn't bounce all day long. That tells me that the shorts are very happy to maintain their position because they think it's going even lower. And the valuation is hard to justify even at this level. So they need to really turn it around this quarter.
What do the companies that are successful in this category, and by that I mean internet sales, what do they have in common that individual investors could look for in new companies?
That's a great question. I think that for a lot of them, it's just going to be really hard to compete against Amazon, for example. And there's a lot of long-term names, Overstock, and retailers themselves are doing their own online business. Companies like GNC, General Nutrition, their fastest growing area was their online sales now. So it's really going to be difficult. There's a very rapidly changing
high bar.
Rapidly changing. The technology is changing. A company like Groupon, I hate to say it, they may not exist in a couple of years with new technology and all the competition.
I tried to put together the bull case and I couldn't find it.
It's very tough.
But thanks for coming on. It sounds like a maturing of the industry. That may be a good thing ultimately. Wayne, thanks so much.
You're very welcome.